What if I told you, every time the economy crashes, the rich don't panic? They prepare. Every market meltdown you've ever heard about, 1929, 2000, 2008, 2020, had one shocking thing in common. The wealthy walked away richer than before, while everyone else struggled to rebuild. Why? Because crashes don't just destroy wealth, they transfer it. From the people who panic to the people who understand how the system really works. Before we break down the hidden mechanics behind this wealth shift, make sure you like this video, subscribe to Lazy Economist, and share it with someone who needs to understand the truth behind every financial crisis. Today, we're diving into one of the most misunderstood ideas in economics. Why does every financial crash widen the wealth gap? Why do millionaires and billionaires treat recessions as opportunities, while ordinary families fear losing their jobs, their savings, even their homes? This isn't a conspiracy. It's a pattern built into the architecture of modern markets. To understand it, you need to see how money behaves during extreme fear, how assets move during chaos, and how the financial elite quietly position themselves long before the panic starts. Let's break down the system, calmly, clearly, and without the noise. 1. The crash creates a liquidity vacuum. When markets fall, most people react emotionally. They sell their stocks, withdraw their savings, cut spending, and move everything into safe assets. But panic selling creates something far more dangerous. A liquidity vacuum. Assets temporarily become undervalued, sometimes by 30%, 50%, even 70%. The rich know this isn't the end of the world. It's a seasonal discount on wealth. While the average person sells at the bottom, the rich quietly buy assets at fire sale prices. This single behavior alone transfers billions. 2. The poor hold cash. The rich hold assets. In every crash, ordinary people rush toward cash, savings accounts, emergency funds, stable currencies. But here's the truth. Cash loses value during crises. Inflation rises. Purchasing power falls. You might have more money, but it buys less. Meanwhile, wealthy investors own assets. Stocks, real estate, companies, commodities that recover and then rise even higher during the rebound. Example. After the 2008 crash, U.S. home prices fell 30%. Rich investors bought thousands of homes. By 2021, those same homes were up 70 to 150%. The middle class never recovered that lost ground. 3. Crashes reset the system. But only for some. Every crisis leads to government intervention, lower interest rates, stimulus programs, asset purchases, but these policies always inflate asset prices, stocks, real estate, and luxury markets, long before wages recover. Who benefits from inflated asset prices? People who own assets. Who loses during wage stagnation? People who rely solely on income. This isn't corruption. It's structural. 4. The elite prepare. Before anyone else notices, the rich don't predict the future. They simply pay attention. They see when debt is piling up. They see when asset prices disconnect from reality. They rotate their money early, before the storm. By the time the crash arrives, they're sitting on cash reserves, low-risk assets, and buy orders waiting for panic-driven discounts. This isn't luck. It's discipline. Here's the hidden truth almost nobody is taught. Crashes don't make the rich richer. They expose how differently the rich behave. A crash is simply a mirror. It reveals who panics and who prepares. Most people lose money because they only participate in the economy during good times. The wealthy participate all the time, especially during the bad. Crashes accelerate the transfer of wealth because the system rewards confidence, knowledge, and liquidity, traits the average person isn't trained to build. This is the uncomfortable reality of modern capitalism. Markets don't reward fear. They reward strategy. So the next time a market crash hits, whether next year or 10 years from now, remember this. The rich don't win because they're lucky. They win because they understand the rules. And they stay calm when everyone else is losing their minds. Your goal isn't to fear the next crisis. It's to prepare for it. If you want to learn more about what they never tell you about money, subscribe to Lazy Economist. Your financial clarity starts here.